JB here. Hope everyone's doing outstanding. Thursday, June 5th, 9:02 a.m. Just a really quick rant, talk about the market. Some names I'm looking at go from the SP futures in the green. They were actually kind of flat this morning until a report came out from the China media that POTUS and President Xi spoke. And then, of course, the China media says it was instigated by President Trump. So, no official report yet from the US. Uh, I think anytime there's conversation between the two, I would take that as a net positive, but we'll see how this all gets spun and played out. Also this morning, just a little while ago, I guess I don't know if it was 9 o'clock or 8:30. The ECB has their meeting and their announcement, and they announced their eighth consecutive rate cut, 0.25%, as expected. Again, I think that's some of the reason why last week you see POTUS coming out saying got to cut rates, because there's all those headlines, right? So, needless to say, market yesterday, very tight range. I was talking about the rant yesterday afternoon about 0.4%. Had some weakness at 10 o'clock, then again at 12 o'clock, and then the markets kind of found their footing, closed pretty much flat as a pancake. The SPY actually closed down a tenth of a percent, while the S&P, the index itself, closed like up a 0.01, a hundredth of a percent. So, nothing much there. I mean, all things considered, I mean, that's 3 straight days to the upside, some consolidation, and that 597 handle continues to be resistant. So we'll see if we can break through that here today. And we were 597.75 here in the pre-market. 597.95 was the highs yesterday. So if we can break through that, I think that bodes well. And then tomorrow we have the jobs report. So we have weekly jobless claims coming higher than expected this morning. Yesterday was all about the ADP employment report. So you have to you have all the bears out waiting for this number tomorrow morning. I would assume it's going to be bad, right? Estimates are for like 120,000. It's probably going to be like 80,000. That's what I would guess. It might be lower than that. If it's lower than that, folks, all of a sudden the bears are going to come out. But the thing is, you look at yesterday's action, the yields tumbled yesterday after the ADP report. Now I think, there's been environments over the last couple of years where you hope for, it's like bad news is good news for the market. It's like, oh my gosh, the worst employment number of all time, market should be tanking, and they soar. And I think, I don't know if we're in bad news is good news environment right now, but you would think it's almost like if the jobs report is bad tomorrow, then right now the probability of a rate cut from the Fed is not until September, right? So you think of bad report, it's going to start coming back to earlier meetings, and I don't know. So maybe that's some of it here, but also some great articles I posted this morning too. It's almost like comical. Market Watch citing that the CPI data might not be accurate anymore. Almost insinuating that it's bearish, the market. And pretty much they're saying because of the job cuts from Doge and then the hiring freeze of the folks who collect the data, they're not out there, right? So the people, I don't know how it works per se, but pretty much I think they go out to retail stores, they go out to markets, they go check prices on a monthly basis and compare them, and that's how they come with the CPI data, right? So to me, it's like unless the person was doing, some of the data that had inflation and missed it, and the people who they didn't fire, didn't replace, or couldn't hire were the ones who would. Those are the ones who were supposed to do the data that would show inflation, while the ones who are still on the job are showing ones where prices are decreasing, right? I mean, pretty cut. So to me, to kind of like use that as a bearish point for the market, it's kind of like, unless the sample size is only 5 people doing the dirt, gathering the data and surveys. All right, that's kind of quick on the overall market. So 597 on SPY. If we can get over that here today, tomorrow, I think into the 600s, that'll bode well. Climb that wall of worry. Yields tumbling. I think that's another good sign there. All right, so now just individual names. W, still wait for this to get high enough to close out some of my calls to cover costs. It came close yesterday, all the way up to 45, and of course I tweet about it, and boom, it drops from 45 back into the 43s, bouncing here again today. I think once it gets going, it's at $50, and then if there's a deal with Vietnam, I think that'll only add fuel to the fire. I was looking to add some more strikes. I'll probably just be patient for now, and then once I can get some of my June strikes out, maybe I'll look to get some more. DX, I was talking about the rant yesterday afternoon. It's one of my old favorites. Back when the AI boom was just starting. Name is kind of in left for dead. I wouldn't say left for dead, but now they're more fundamentally sound position wise. trades 2 times revenues. They have an active buyback program, and then they just reported a monster beat and raise on Tuesday. Well, I wouldn't say a monster, but a strong beat and raise on Tuesday. And it's a name that now it grows double digits, and I don't think it's pricing in growth. So I think it trades over $10. If it gets over 940 or so, and I can close some of my calls out to cover costs, I might look to get some July strikes as well. Lemonade, disappointing open yesterday. No news, no catalyst. 36 all the way down to 34. It was 34.50 by the noon hour, and then it just embarked on a nice move to the upside into the close. Closed pretty much right near 36. Today's kind of like today. I think if it can hold its gains, I think it starts to squeeze 2.0 and then it heads over $38. Similarly, I might look for more strikes on this one too, probably further out. MDB, disappointing. Well, I would say disappointing, but I was looking at calls for premium build all week last week and this week. The calls were pretty much flat, and I didn't want to hold the risk into earnings. And then, sure enough, monster beat and raise. Now, this was a monster beat and raise, just huge guidance raise, stock buyback, all the bells and whistles. You start looking at the gap fill around 250. If it opens, I don't know what the premiums are going to look like at the open. They're probably going to be expensive, but I might look for some spec lottos to play for a gap fill up over 250. But some of those earnings plays work out, some they don't. Well, I prefer to trade ones that I have high conviction in, but I'm certainly less apt to do that if I don't have freebies, right? If I'm not able to ride some premium and close them out to cover costs and ride the rest of the earnings. Other names I'm watching as we get close to Friday. RH is always a name I'm looking for some lottos. 191 is the 50-day moving average, so don't be surprised I get some there. DocuSign reports after the close today, and one that I probably should have got for the premium build. It's up at the upper Bollinger Band, so I don't know if I'm going to trade it today, but we'll be watching tomorrow for earnings. The other names, Pool. Spreads are still so tough to play. The 330s, it's 2 days in a row to the upside, back over its 50-day moving average. I think it trades 330 plus. So with that premise, I might look to get 330 or even 340 strikes to June's. Still eyeing TKO here. I'm trying to think of some of the other names I'm watching. I mean, Joby, disappointing, was $8, and then it's just been fuddling around here. Hopefully, you can find some footing here today, get over $8 and run and gun. I think that's it, folks. I'll be back on audio later. Let's have a great day. Rock and roll.